It's important, Avan, to really take cognizance of the fact that it's been in line with expectations. Even though we've got that $200 billion number as expected, remember, they still don't have the breakdown on the agricultural goods like soybeans, etc., which were also keenly eyed. But nonetheless, in line with expectations, yes, some of those intellectual property and technical disputes have been addressed, but will continue to be addressed from here as well. So this is the first step. Phase 2 also, of course, will be coming soon. And it's all going ahead as planned, and that's really what markets are taking heart from this morning as well. So yes, we did see a cool off by the end of the session overnight, but continuing to trade at records, and it's really waits to be seen what we see post this major step, and the fact that we've actually got that big relief coming in, no unexpected surprises, in line with what we had expected. Europe continuing to clock mixed gains. We'll wait and see how we shape up as well on opening today. Back to you.
All right, Jahangir Aziz as well joining in to discuss that and lots more. And finally, it has been quite a historic moment. How have you read into the contours of this deal? Because some are saying that it doesn't remove the existing U.S. tariffs on Chinese imports, and that leaves a few questions as to how the terms of this agreement could be enforced, Jahangir.
So yes, I mean, the deal came out, at least from our perspective, somewhat less favorable than we had expected. We had expected at least some of the September 10th tariffs to be removed. But the fact that the deal actually was signed is an important step in terms of calming market nerves and in establishing the fact that, at least we have some form of trade truce in the horizon for 2020. It clearly leaves behind lots of unanswered questions on the other issues which are non-trade related. There are questions about, when will phase 2 even start being negotiating? To what extent do the elections in the U.S. prolong the process? So while all of these uncertainties are still there, I think it's a step which will calm market nerves down. And as I said, even though it was a minimal set of issues that were addressed in this deal, and we still do not have any real clarity on what China will need to do or when will it happen when the existing tariffs will be removed, which was a bit disappointing. At least we do have a trade deal that has been inked.
Jahangir, I'm still trying to wrap my head around it. America has agreed to, or China, I beg your pardon, has agreed to import American products worth $200 billion. But whatever I've read on global press and again on wires, there is no clear mention as to what Chinese will get out of this.
Well, because China does not get, as far as we can make out, the threatened tariffs increase that were threatened for. That was the December tariffs. That doesn't get imposed on them, and given that you do have now breathing space for China to whatever they have agreed upon on the intellectual property rights, transfer technologies, those are things that China actually will have to show in good faith that they have actually made progress on them to get the next set of relief. So I think what China does get out of this is that the big headwind that was pushing back on Chinese growth for most of 2019 and particularly the second half of 2019, that gets taken out. So I know that in the bigger scheme of things, $200 billion versus just a post, or not just the fact that tariffs are not going to be new tariffs are not going to be raised doesn't sound much. It is actually a big deal.
Jahangir, what are you making of the other political development that one has seen? The dramatic overhaul in the Russian government, the fact, that there is going to be a dramatic power shift now, perhaps. Does that have any repercussion on world markets?
I think, Russia has been, an important part of emerging markets, but it's sort of been something that, it is not part of the mainstream for a variety of reasons, including the fact that, there were sanctions imposed on Russia, which made it very difficult for global markets to access Russia. So to the extent that this political uncertainty affects Russian asset prices. I think to the extent that it affects ruble does have some impact on people's positioning in the Russian market. But as I said, it has for a long time been so cut off from the mainstream of emerging markets that even though the political change is important and the political volatility is important, and most of the impact, I think, for the market as a whole, for emerging market investors as a whole, will be felt only through what's happening to ruble.
Thanks very much, Jahangir, for joining in and sharing with us your outlook on all that's happening across the globe this morning.